Ladies and gentlemen, welcome back to the Crypto News Podcast. We are buzzing as always, guys. Things are looking, I don't want to jinx it, but things are looking pretty darn good. And it's nice to see the charts looking like this. It's nice to see Bitcoin with all its crazy momentum. Ethereum's getting momentum. Solana has momentum. Everything has momentum right now. Hopefully macro can clean up a little. And that's what we're going to get into on this show today. Last time I spoke with this lad, I think it was back in October. I was down in Mexico. And this was right before he actually may be a good luck charm because things weren't moving too quick. And then as soon as I finished recording with him, we went parabolic. So can't wait to get into this one. Hopefully a good luck charm to get us to that next leg as well. Today we have the one and only Federico Brokate on the show today, VP and the head of US business at 21.co, better known as 21Shares. He oversees the growth of the US business, providing investors with the most access, convenience, and quality in the digital asset ETF industry. Previously, he led the iShares business strategy team at BlackRock. Yes, the big bad BlackRock, where he created and executed strategic initiatives during organic asset and revenue growth. We've already had him on, pumped to have him on for round two. Federico, welcome to the show, mate. How you doing this lovely morning?
I'm doing great, Matt. Thank you so much for having me. As you mentioned, a lot has changed in the crypto world over the last few months, especially since October when I was last on the show.
100%. And the next time I have you on, hopefully, maybe we'll do a little Spanish on the show. It's getting a little better now that I have an Argentine girlfriend. You know, things are definitely picking up, but I do need to practice more. Necesito practicar más. Y la próxima veces que hablamos, quiero que este episodio vamos a ir, va a ir en español. So, I'm still a little sketchy,
un podcast en español sobre cripto sería increíble. Sería la primera vez que me tocaría hacerlo, pero me encantaría.
Too many tough words in crypto. That's the problem. It's like me with French. I speak French, but when I have to go finance talk in French, my brain is just like, it's just insert English word. Anyways, let's jump into it here. The market's buzzing right now. Bitcoin's hot. ETH is hot, Sol's hot, everything's hot. I saw we had a record inflow of stable coins over the last week as well. Things are going crazy. What is your take on the market right now? Let's start with Bitcoin. I mean, we're still hovering at a great price. And literally like 6 weeks ago, when I just got back to Toronto, Bitcoin was like what? High 70s, low 80s. I was like, man, oh man, what is going on right now? Are we in the dumps? Are we going to go back to the previous levels? And things are looking good. So Federico, what is going on with Bitcoin right now in the overall crypto market? Let's start with maybe not like price action talk, but a little bit of price action talk, if you know what I mean.
Yeah, absolutely. So if I think back to the last time I was on the show, like you mentioned, Bitcoin was somewhere in the 60 to 70,000 range. We're now near 110,000, and it's been sustained for the last week or 5 days, if you will. You know, from my vantage point, I think all the tailwinds that we spoke about on the last episode are really coming to fruition, and we're starting to see Bitcoin really assert itself and grow into this macro asset that we've all been describing it as right before our eyes, right? If I think about the current market environment that we're in today, we've seen a tremendous rise this year in global market uncertainty driven by the headline items that I think everybody knows, which are, the back and forth on tariffs, geopolitical instability, wars in certain key parts of the world, etc. Risk assets in this backdrop, like equities, especially tech equities, have struggled to find their footing, and they're down to flat in the best case scenario over the last 6 months. Bitcoin, on the other hand, is up 20%, right? And it's sitting, like I said earlier, at 110,000. And, there's a lot of reasons for that. I think the one that sticks in my head the most, or that pops out at me the most, is really the investment thesis of Bitcoin is coming to mature and is coming in a key moment in the market, right? So Bitcoin's decentralized nature, it's an asset that can't be tariffed or manipulated by states, which given in, this current market environment provides a special appeal to investors that are looking for something that provides a bit of a hedge to this environment, if you will. On top of that, you added scarcity, right, and its protection against currency debasement. Bitcoin really makes for an increasingly attractive store of value, and it's becoming this digital gold that we all talked about it as, but it's finally actually playing out that way, given the decoupling we've seen from some of the traditional risk assets.
Yeah, I mean, it's such a, let's talk about the decoupling, and then we'll go back to Bitcoin, but this is a big word that gets thrown around, and it's really not a big word. It's one of those words where it's not a big word, but it is a big word. It gets thrown around a bunch. When I first learned about Bitcoin, I guess would have been like actually did a deep dive was 2017. I didn't get it until 2019. Wish I did, but regardless, the whole decouple thing was like such a powerful narrative because then we can actually we find that ethos and narrative that we've been looking for the whole time. It's like, okay, Bitcoin is truly not even synonymous with gold, but slightly synonymous with gold, and has that leg up of being a digital version of gold. And I finally think we're getting there. Do you have again, I know it's tough to go timelines and anything, but like, do you know how close we are? Do you have a feeling for what time period it will be when we've like actually dead ass decoupled? And it's no longer a debate. It's fully like, hey, risk on, risk off. This is where we are.
Yeah, so I think as more and more institutional dollars come into Bitcoin, that's when we're starting to see the behaviors of the asset class change and resemble more so what it was meant to be, right? This is the maturity or the maturing of Bitcoin that a lot of people have been talking about for the last several years, as you mentioned. If we look at this year in particular, like I mentioned earlier, risk assets are flat, best case scenario, most of them are down, and Bitcoin is up, right? And that's exactly what the decoupling means. We're seeing differentiated source of return for investor portfolios coming from Bitcoin. And so this is where investors can take a look at the asset and say, okay, on a risk adjusted basis, this is actually adding some benefit to my portfolio and the total holdings that I have. And that is different from the source of returns that maybe your NASDAQ ETF is providing, right? So this differentiation is the key thing. And obviously, there's still a lot of risk assets that are going into Bitcoin, especially as we think about things like the M2 money supply rising, right? In times of greater liquidity, we've seen Bitcoin continue to perform better. And so a lot of these things are lining up from a geopolitical and macro perspective to facilitate the decoupling that we've all been looking for.
I love that. The supply shock. This is something that like, and again, you're a vet and you are literally in this space, but I get asked this all the time. Even on Monday, two different friends texted me, Federico, and were like, how do Michael Saylor's buys not move the market? And I've had this discussion good amount over the last 6 months with a couple different guests on the pod. Some people have brought up some great points. One in particular, how MicroStrategy is almost a new form of Bitcoin, which is an interesting one, where it's like, even though they keep buying Bitcoin, they're buying so much that they're like becoming sort of a synthetic Bitcoin, if you will. But it is pretty wild to think about when you have Saylor literally buying in 500 million to like $1 billion clips every single week. Today you had or I guess yesterday you had the announcement GameStop, 500 million Bitcoin, 580 or whatever it was. And that's a whole different beast because, you have all the degenerates younger than us, the Gen Zers who are like all in on the GameStop and the Nokia and all the meme coins, the Reddit meme coins. But how the hell is there not a supply shock yet? Like every single week, I follow all the accounts on Twitter, Federico, and I see the Bitcoin supply on centralized exchanges continues to go down, and it goes down and it goes down. And then you have the 5, 6, 7, 8, 9, however many million Bitcoin are gone forever and have been, vanished or are in dumpsters on ledgers or have been given to, people who have lost it. And it's like, how are we not seeing a supply shock? This is what I don't get.
So I would argue we are. From my perspective, we've seen over the last 12 months alone, we've seen corporates like Michael Saylor's strategy or ETFs buy over 750,000 Bitcoin. While in that same time period, only 165 million were minted or issued. So you're looking at a delta there of upwards of 550 million, which is absolutely incredible. 550,000 Bitcoin, which is absolutely incredible. Michael Saylor, just to focus a little bit on MicroStrategy, I think they have somewhere around $60 billion worth of Bitcoin on their balance sheet.
It's wild.
And like you mentioned, Matt, it is a little bit of synthetic. Actually, the way I would characterize it, it's more of a levered play on Bitcoin because they're using leverage to buy more and more and more of the asset. But similar to MicroStrategy, GameStop is certainly another company that is doing this and adding it to their corporate treasury. Japan's MetaPlanet, France's blockchain group, 21 Capital, which is that new company that was backed by Tether and Cantor Fitzgerald, and even the Trump Media. Yes.
And you got Nakamoto too. Yep.
Nakamoto. And even Trump Media, I think, announcing this week that they're looking to create a $2.5 billion Bitcoin treasury as well. So these are all new corporate buyers that are using Bitcoin as a strategic reserve asset on their balance sheet. And they are certainly going to be adding buying pressure, if you will. And ultimately, as supply continues to go down, that's what we'll see that rapid rise in prices, which I think is what we're seeing now the last few weeks.
So the last few weeks have been great, going from, we'll call it 80 to $110, which is, 30% in a couple of weeks, which is absolutely incredible. I remember the days back in 2021 where I would wake up and these were the days from like 30 to 69, right? When it
Mhm.
2x'd in what it was at 4 or 5 months or whatever. And there would be like 5K nights. And like 5K right now is, less than 5%. 5K back then was, 10, 20%, right? I'd go to bed, I'd wake up, and I'd pull up CoinGecko or CoinMarketCap, and I'd be like, what the F? Are you kidding me? Another fight? Like, are we going to experience some of that soon? Because I still don't think we've had like a vicious, vicious day in a long time. I think the last vicious day was after, like vicious being good here, Federico, but was after you and I spoke. I think it was one of the days I was in Argentina. We went up like 6 or 7, 8K in one day. Do you think that's going to happen soon with the supply shock, with the macro, with the decoupling, with the institutions continuing to get in, with the low levels of Bitcoin on exchanges? It's got to happen soon, right? Where we get that vicious, like, 110 to 125 in one day.
I mean, I would argue that May has been that already, right? I think Bitcoin is a $2 trillion market cap asset today. To have it go up, like you said, what was it, 25% in a single month? That's absolutely
It's
astounding, right?
amazing.
And if you
Yeah,
think of
yeah.
any other $2 trillion market cap asset going up by that much in a month, it would be all over the headlines permanently for the remainder of the year. So I think the growth that we're seeing in Bitcoin now, even though the percentages look perhaps more muted to the single day or single week jumps we saw 2, 3 years ago, it's still the amount of market cap that's being added in short periods of time is pretty astounding.
Yeah. No, it is wild. Any risks? Again, you and I are, I don't want to say maxis, but like we're definitely biased with a capital B. You could just paint the word bias over both of our beautiful faces right now. But do you see any foreshadowing risks? Do you see any behind the scenes risks, front of mind risks? Like, is there anything besides the macro environment which screams or maybe even whispers like, hey, you should maybe be a little bit careful? Because like for me, besides macro out of ours and, Bitcoin people's control, I think it looks pretty freaking good right now.
Look, I think it looks really good as well. And like you mentioned, we are very biased. But from my perspective, the tailwinds have never been better for entering the market, even at current prices, right? We have more regulatory support in the US than ever before. You have more new buyers, which we can touch on in a bit, coming to market as well and beginning to think through how they allocate to Bitcoin, not necessarily participating yet. And then you have the decoupling, which if I had to pick the biggest risk right now, it would be that we actually don't see sustained decoupling for a significant period of time, right? It's been
Mm.
we've seen the decoupling we want for a few months now, but obviously geopolitical risk and macro concerns are still prevalent, right? And you can see that in the rest of the markets. That absolutely has a potential impact over the prices that we're seeing today. And if Bitcoin doesn't continue behaving how it's been in the last few months, then that's going to be a key risk to keep an eye on, if you will.
Yeah, well said there. The launch of the ETFs was obviously a huge success. I think it was like the quickest growing ETF of all time. I could be
Hmm.
wrong there.
No, you're right.
Yeah, which is pretty wild. I didn't think it would go as well as it did at the beginning of last year. And crazy to think that it was, Jesus, like what, 18 months ago already, but I didn't think it'd go this well. Do you think that this huge inflow of new ETFs, but when I mean new, I mean different currencies. You already had Ethereum. Solana's pretty darn close. I mean, it's already live in Canada, but Solana's pretty darn close. Then you have some XRP, some Doge, which I mean, I don't really love, but c'est la vie, story for another day. Does that provide any risk to Bitcoin where some of Bitcoin's liquidity and volume could potentially be swiped away and gone into those assets? Or do you think that's just a completely different, like, funds and wealthy individuals are like, hey, like this is my Bitcoin allocation and this is my altcoin slash shitcoin slash higher risk allocation? Do you think it's going to go like that, or will these Solana, Ethereum, Dogecoin ETFs, will these guys swipe up some of the volume that's going to Bitcoin right now?
I really don't think they will swipe up or take any market share or wallet share, if you will, from Bitcoin. I think, they target different portions of investor portfolios, and they're oriented, I think, especially towards the tail end of assets, towards more retail and a very different buying base that who is participating in the Bitcoin markets today. A lot of these new ETFs and 21Shares in full disclosure, we are participating in the next wave of ETF filings, but these assets have very different value propositions. If I think about what drives Ethereum prices and what drives Bitcoin prices, especially this year, we're seeing a big divergence there in factors for risk and return drivers. So I would say I'm not concerned about the market share for Bitcoin being eroded by the new assets. If anything, I think the pie for digital asset ETFs in general will continue to grow as we see more products come to market and more products finding portfolio fit. So I think it's only a positive if we see more choice and more opportunities for diversification for clients. And again, these are different assets targeting different parts of investors with portfolios. So I wouldn't be too concerned from that front.
Yeah, well said. Federico, you're on a roll here, mate. Got to give a huge shout out to our sponsor of the show, Prime XBT. And when we get back, we are going to jump into 21Shares and what Federico and the team are moving and grooving on right now. Until then, huge shout out to Prime XBT, longtime friends and longtime sponsors of the Crypto News podcast. We love the team at Prime XBT as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet, you can easily design and customize your layouts and widgets to best fit your trading style. Prime XBT is also running an exclusive promo for listeners of the Crypto News podcast. Use the promo code CryptoNews50, that's CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, that's CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. And now back to the show with Federico. Okay, mate, let's jump into 21Shares here. You guys, again, have one of the behemoths, one of the OGs in this space. What are you guys working on right now? You guys are always launching new products. I mean, when I see that big long list of the 70 crypto ETPs, ETFs, whatever you want to call it, your guys' name is on a bunch of them. Any big ones coming out soon? And like, if you could, I know you probably can't say this, but how does it work with the regulators? Like, do you guys speak to them, or is it just paperwork going back and forth? Like, walk me through, one, what you guys are working on, and two, how do you guys actually go about getting this approved with the SEC and with the regulatory bodies, so on and so forth?
Yeah, no, it's a great question. And so I can't say too much about each asset because we have a couple of filings live and we're in what's called the quiet period for the new registrations. Similar to other issuers in the space, we have a Solana product, we have an XRP product, we have a SUI product, and a Dogecoin product also filed for here in the US. And it's an exciting time. We're working with regulators, particularly the SEC, and we engage with them both directly through our filings and then also through our exchange partners. So think of SIBO, NASDAQ, or these exchange providers that are actually filing on our behalf to bring some of these products to life. And so when we work with them, they come back to us with questions on the product, oftentimes on the assets, and we're able to have a good dialogue based on what we view as the main qualifiers are for these products to be listed as an ETP in the US.
And do you guys, like, is this just internal where your team is doing market research and perhaps listening to your customers as well, or whatever the case may be? Or is this like doing this because the others are as well? Like, how do you guys decide which cryptos to pick? Because there's so many good ones. And then it's like the trendy ones, right? Like, do you go at you just said you're going at a SUI, but like, I know some of the new ones, like the bear chains and the abstracts, like they're already trying to get, ETPs going. I know Movement, they're sort of in the dumps right now because they did a couple sketchy things, but they were trying to get one too. Like, how do you and the team decide which ETPs to launch?
It's my favorite question to answer because we have one of the most comprehensive research teams in the industry today. And everything we bring to market is research backed and research sponsored. So before we bring any product filing to the US or to Europe for that matter, our research team does a full due diligence process on every single one of the underlying assets. And this has been one of the reasons we've been able to avoid different issues in the past that, come with being part of crypto. But it's because we have this research lens over all our product innovation work. And so, the assets that we quickly went through now, these have all been vetted by a research team, oftentimes working directly with the foundation to understand roadmaps, to understand, some of the key questions we might have around tokenomics and kind of the team that's backing and organizing a lot of these projects. And so we're able to have a really educated view on which ones of these not only should be in an ETP form, but then because we have the European suite, we're able to say, okay, we think these products also have demand in markets that would be similar to the US as well.
Is it weird? I mean, it is sort of weird that like Canada is usually the first one to lower. And it's so anti-Canada because like Canada sort of hates crypto, but we also allow like the newest and the first entrant into a lot of these new emerging market or emerging tech financial products and instruments. Europe follows a lot of the time, even though I feel like they're almost worse than us. And then the States. Is there a reason for that? Like, why is the States usually last when they are more chill about crypto than we are and the Europeans are.
So I think it's an interesting observation. So the case for Europe is interesting, where there was just a very clear framework for which types of products could be launched,
Mm,
irrespective of the underlying. And so that's why 21Shares was originally set up in Zurich, was because we could go to market and bring, a basket ETP. We could bring a Bitcoin ETP. We could bring Ethereum and staking ETPs in that market. Canada in 2021 approved the listing of crypto ETFs as well. And that's since then we've seen Canada really lead the US when it comes to new strategies and kind of better products, if you will, from the perspective of allowing in kind, allowing staking, and allowing, Solana, for example, is already listed in Canadian markets. So the US has been behind because there hasn't been a clear regulatory roadmap or guidelines, if you will, for why you can bring some of these assets to market and which ones you can't. But I think that's changing, right? I think from what we're hearing coming out of the SEC and coming out of Washington, the team is certainly focused on creating what that framework would be, or how it should look for crypto products in the US. So hopefully sooner than later, we have that here as well.
yeah, it's super, super interesting there. Crazy stuff here, man. And anything else on 21Shares that you guys are moving and grooving on that you can tell us? I know as a company like you guys, you can't really give us news per se. That has to be like, oh, it's a official filing on Newsfile and the regulators, and then it comes to us. But is there any news you can drop?
Yeah, I mean, look, there's a couple of things that we're looking at pretty closely here. And I alluded to it earlier, which really is about the list of buyers, or the types of buyers that are coming into Bitcoin markets, and how that's expanding rapidly. That's something that we're paying a lot of attention to. I think I actually mentioned this last time I was on the pod, but advisors and institutional ETF buyers are the buying groups that we think will be the largest drivers of Bitcoin ETF flows over the next 3 to 5 years. And they're certainly coming out in size, right? So we think by the end of the next, let's call it 3 to 5 years, every wealth platform in the US will have access to Bitcoin ETFs, which is certainly super interesting, and is very bullish when it comes to asset prices. The other group that we're looking at, and we hit on this a little bit earlier with the MicroStrategy conversation, but are corporate treasuries, right? And how corporates are adopting Bitcoin on their balance sheets.
Huge.
I don't know if you saw this yesterday, but there was a funny story coming out of Europe, which was there was this company called SharpLink, which is a gaming company.
Yeah.
And they recently, so for whoever didn't see it, they recently raised capital, and they told their board and the public that they might elect to use a portion of that capital to purchase crypto. And automatically, over 24 hours, their stock price shot up 500% versus the prior day's close. So that should give you a sense of like how the market is valuing Bitcoin and crypto more broadly today, which is certainly super exciting. But this last
the
group,
NAV,
sorry, go ahead.
the NAV, like the NAV values. Well, you can't say net asset value. The NAV is insane on the corporate treasury crypto companies. I don't know how much longer it's going to last. I hope it lasts longer, but it is a wild little loophole right now. And not loophole as in like a legal positive loophole. Like these opportunities don't grow on trees, and there's a reason why everyone's doing this right now, because it makes sense. And clearly the market is saying, hey, give us opportunities and give us instruments to invest and have exposure to crypto without holding the asset itself, because it's such a shit show. And I love this. I absolutely love this.
Absolutely. And actually, I would take that a step further and say the market is saying the investing capital in Bitcoin is a great use of capital. Like
Yeah.
the market is rewarding organizations that are choosing to invest in crypto with their capital, which is fantastic. So certainly agree with you. Let's see how long the premiums last, but it's something that I think every company right now is thinking about, given the returns that we're seeing on the asset. The last buying group, which is very, very early in the adoption stage, that we're closely monitoring, are US states, which are exploring the creation of strategic Bitcoin reserves at the state level, not necessarily at the federal level. New Hampshire and Arizona recently both passed legislation along these lines. And I think the New Hampshire example is the most interesting, where they approved to invest up to 5% of what's called their general fund and their revenue stabilization fund for any crypto asset that is above the 500 billion market
I
cap.
saw that.
Right.
Yeah. AKA one.
AKA one. So they're starting with Bitcoin, but
Yeah.
these funds manage around 2.5 billion in combined AUM. And so if
It's
you see
wild.
this happening across, the other 30 states that have similar legislation in the works today, you're bringing online a whole new buying base for Bitcoin. And again, to your point on, supply going down on centralized exchanges, that bodes well if you're a long-term investor and you're thinking about price action over the next 3, 5, 10 years. So certainly something that we're keeping an eye on. And the last thing I'd say in terms of what we're paying attention to at 21Shares right now is the regulatory momentum in Washington around stablecoins. So for those who haven't followed it as closely, the latest piece of legislation that we think, or we're optimistic around getting passed, is called the Genius Act, which last week the Senate voted 66-32 to put forward towards a final vote. And what's interesting about this act is that there was actually a really strong amount of bipartisan support, with 16 Democrats actually going over the aisle and voting in favor of passing the Genius Act, which was amazing. We loved seeing that. And it really provides the very first bill that would provide some regulatory clarity for crypto, in this case targeting stablecoins, which we all know is one of the killer applications of our industry. You mentioned this at the top, Matt, but we've seen record level of inflows into stablecoins over the last few weeks. I think it's nearing almost 250 billion in total AUM across
Insane.
stablecoins, it's absolutely insane. And it's insane because there's no institutional participation yet, right? You don't have the
Well,
likes of.
did you hear about like I think it was JP Morgan, who was it? It was JP and maybe Schwab or someone, you probably know this better than I do, but they were like, oh, we're just going to do a big bank stable coin, which is so classic them, because like they could snag so much market share from Tether and Circle and the other stable coins if they did their own, because these guys have hundreds of millions of clients and consumers just in USA alone, right? Like it's
100%.
it's smart, but at the same time, I wish they didn't, but also like, this is going to happen. It's no different than them just opening up their own Bitcoin custodial line. Like they're probably not going to partner with a bunch of other organizations. They're just going to be like, hey, let's do it ourselves. Sort of like what Citadel did when they jumped in bed with Binance and Wintermute and the other market makers, and I think the Citadel Q1 earnings report came out and they printed an absurd amount of money, like huge growth. So once all these big guys get in, like they're going to take their market share. It's the same as everything else in life.
And what I would say is we're so early, right? That I think this is a situation where rising tides lifts all boats to some degree.
Yeah.
So,
Yeah.
if I'm a Circle, if I'm a Tether, if I'm a legacy, a stablecoin issuer, I wouldn't necessarily be concerned about this happening. I actually think it's a fantastic sign of maturation of the market and a really big endorsement by the biggest institutions, whether it's the banks or it's a PayPal, MasterCard, Visa. These are all endorsements of the underlying technology and the use cases, which is absolutely amazing.
Yeah.
And by the way, this market grew to 250 billion without any regulatory standards or clear guidelines distinguishing one issuer from another, right?
Yeah.
To clients or end investors, a Circle might look very similar to a Terra. We all know that that's not the case now, but with the absence of guidelines from regulators, this hasn't been, it inhibits growth, if you will.
Yeah.
And so the Genius Act fixed that. There's going to be full backing mandated from all stable coins by 1-to-1 from Treasuries or dollar equivalents. These issuers are going to have to register themselves with the federal banking regulators. They're going to have to go regular audits. They're going to have to comply with anti-money laundering measures. So all this is a fantastic positive. And what I take away the most, or what excites me the most, is that I think this is just the beginning. Because once you normalize having stable coins and blockchain-based dollar transactions, you could very easily see where the direction of travel goes towards moving more traditional financial assets like stocks, like bonds, onto blockchain rails as well, right? And that's where, to me, the value proposition for non-Bitcoin assets like Ethereum, Solana, Sui, the likes, that's where that all sits, right? In the ability to bring all these traditional assets on chain, and stable coins are just the first step. And this legislation is going to be like the first domino in kicking off all of that work.
Well said. Federico, always a treat having you on here, mate. I know you couldn't give us any news, but any hot takes before we let you go? Any areas of crypto that we didn't discuss that really excite you at the moment? Anything top of mind you want to dump before we let you go today?
Look, I would focus on what we're seeing from projects all across the industry, which is really, this focus on DeFi. And I think the focus on bringing a lot of use cases and a big value proposition from different foundations in the form of their technology, right? And this is something that we're seeing with all sorts of organizations, whether it's from Ethereum to Polkadot to XRP to Solana to even Dogecoin and Sui, which again, I can't talk about the investment specifics too much because of our quiet period, but all these organizations are doing really interesting, innovative work. And at 21Shares, we're just super excited to be part of the industry and being part of those vessels that brings capital into the crypto world. And we're looking to continue that mission.
Love it. As always, appreciate the time here, mate. Before you go, can you please let us know where listeners can find you personally and, of course, 21Co/21Shares online and on socials?
Of course, you can find us and all of our market leading research at 21shares.com/US. And you can find me on Twitter at Fede_Brokate for all of my posts regarding our latest research.
Love it, folks. What an episode with Federico Brokate, VP, Head of US Business at 21Co. Huge shout out to him and the team for making this happen. If you guys enjoyed this one, I hope you did. Please do subscribe. It would mean the world to my team and I. Speaking of the team, love you guys. Thank you so much for everything. And back to the listeners, love you guys. Keep on growing those bags and keep on staying healthy, wealthy, and happy. And let's get a couple more weeks of green. Thanks for tuning in, and we'll see you on the next one. Ciao.